Good afternoon, coastal Southern California, and happy Turkey Week. I'm Jennifer Tim. I am a real estate agent, a real estate wealth advisor, licensed in both Oregon and California. And I am here today with your midweek market brief. And this is where smart money watches the market. Let's jump right in. And let's have a look at our national outlook first. So, what's today? And as always, we pull the information within 24 hours of presenting it, most of it actually within the past 12 hours. So, as of today, jobless claims are down to 216,000 for the week ending November 22nd, which is the lowest level in 7 months, suggesting layoffs remain low. Builder sentiment is inching up, but it's still weak. The National Association of Home Builders Housing Market Index rose to 38 in November from 37, but remains under the 50-point threshold. And of course, when the builder sentiment is low, they're less inclined to actually start new builds and bring more inventory to the market. Most builders cutting prices, 41% of builders reported price reductions in November, a post-COVID high. Economic activity steadies with warning signs. The latest beige book, the Fed summary, shows U.S. economic activity largely unchanged, with some districts seeing weaker employment and consumer spending. So our national outlook, the heat map for housing and economy, layoff risk remains muted. Weekly jobless claims fell again, signaling no surge in unemployment. New build home optimism returns slightly, as I mentioned. Builder sentiment ticked up, but remains below that neutral threshold. So again, just not willing to jump in and bring some more inventory to the market. Discounting entering new home market with 41% of builders lowering prices, buyers may start seeing better deals on new construction. Mixed macro signals. Economic activity is flat across many regions, consumer spending soft, and households cautious. Headwinds for demand if sentiment deteriorates. And still low pipeline of new inventory. Tight supply plus cautiously optimistic builders could keep resales and rentals relatively in balance. Our mortgage rate watch. This is as of today. This is published around 4 p.m. Eastern Standard Time, and I pull it within minutes of it coming out. So mortgage rates slightly higher, but remain near long-term lows. So our 30-year fix is sitting at 6.22%, 15-year fix at 5.78%. Wednesday, today, was far less eventful than the first 2 days of the week as far as mortgage rates were concerned. And this is according to Mortgage News Daily, where I pull this information and the commentary. The average lender raised rates just a hair. But apart from yesterday, these are the lowest levels in a month and very close to the lowest levels in more than 3 years. Bond markets and mortgage lenders will be closed tomorrow for Thanksgiving. While Friday is technically open 9 times out of 10, it may as well not be. In other words, the Friday after Thanksgiving rarely sees any meaningful movement in mortgage rates or the underlying bond market. So we'll see what everything is next week. Our national smart money insight, with levels still low and builders beginning to discount, we're entering a wait-and-see bargain window. For buyers, especially in new builds or new construction resales, this could be a chance to secure a home at a discount before broader sentiment and prices recover. For investors and sellers, keep a sharp eye on consumer sentiment and job data. They'll drive demand more than interest rate cuts in the near term. Moving on to our local market spotlight, starting with Capistrano Beach. Our median list price is up to just under 4.5 million, price per square foot, 1,123. Inventory, 20 homes on the market. And because it's such a small, really small, unique market, just one property being sold or coming onto the market could totally change the numbers, which is what we've seen this week. Our median days on market is up to 112 days, and our market action index is 33, which is up slightly from last week, but still a slight seller's advantage. Our smart money insight, Inventory is tightening and market activity is trending up, but prices remain stalled. Buyers with patience could find negotiation leverage before potential price rebounds kick in. Your smart move, look for overpriced listings that have lingered and are more open to negotiation. As I keep saying, there's those sellers, if they've been on the market for a while, maybe really looking to move these properties and get them into escrow, and try and get them closed before the end of the year. That's a little tough with a 30-day escrow right now with holidays, but if you've got cash and can close quickly, you never know. Dana Point, median list price is up to 5.9 million, price per square foot 1,780. 39 homes on the market, which has come down. Median days on the market is 98. And oops, I didn't change that, but it is a slight seller's advantage of 39, not 38, and that is up. So our smart money insight, cooling momentum with luxury price tags means high-end buyers should stay alert. Sellers may blink first into the softness. Smart move, watch for motivated sellers in top-end segments, particularly homes on the market for 100 plus days. Moving on to St. Clemente, median list price just under 2.5 million, which is up. Price per square foot is up to 872. Inventory of 86 homes, up slightly, but it's still so low compared to our, I don't know, normal markets. Median days on market is 108 days, and our index has gone down slightly, but we're still a slight seller's advantage. The market is balanced, but if our MAI ticks upward again, today's plateau could become tomorrow's floor. Buyers should act before pressure returns. Smart move, target listings with price drops, but solid fundamentals, potential equity upside in the medium term. And finally, San Juan Capistrano, our median list price is just below 2.4 million, which has come down. Price per square foot has stayed unchanged at 747. Inventory is down to 35. Median days on market is down to 42. This remains our strongest market in coastal Southern California that we're covering today, and with a market action index of 48, which is up. So with the strongest sellers market in the region and fast-moving homes, this is a momentum market. Buyers should move quickly or risk paying more. Smart move, serious buyers should get pre-approved and be ready to act fast or get priced out as the trend accelerates. Remember to watch your feed for market data for some of the other areas. And today, for our global perspective, I want to share something, some information from a National Association of Realtors study, which shows that foreign buyers are returning to purchasing and investing in U.S. homes. And why the interest? Well, we'll kind of get to that, but I am a certified international property specialist, so watching the global market is really important both at home and beyond our shores. So there's a surge in international buying. Foreign buyers purchased 78,100 US homes between April of 2024 to March of 2025. That's up 44% versus the prior year. COVID definitely dented a lot of our foreign buyers, and then there's been other um, global economic factors that have played in this as well. $56 billion has been invested. That's buying activity translated to $56 billion in existing home purchases, a 33.2% increase year over year. Record high median purchase price. Foreign buyers paid a median of $494,400 per home over the national median for all buyers. And these are cash-heavy transactions. 47% of foreign buyers paid all cash versus 28% among US-based buyers, giving them an edge, especially in competitive or high-rate environments. Investment and vacation home demand strong. Nearly half of foreign purchased homes were for vacation, rental, or investment use, more than triple the rate for domestic buyers. The top US destinations remain Florida, California, Texas, New York, and Arizona, coastal high amenity areas and traditional gateway markets. So diving in a little further into those markets, So, Florida, 21% of all foreign buyer purchases were in Florida. California, 15% share, making it the second most populous state for foreign home purchases. Texas, 10% of foreign purchases, a stronghold especially amongst buyers from Latin America and Asia. New York, 7% share of foreign home buyers, continuing its role as a global gateway market. Arizona, 5% share, increasingly attractive as a lower cost alternative with sunny weather and growing appeal to retirees and investors. And why these markets matter. These states combine location appeal, coast, sunbelt, global gateway metros with strong demand fundamentals, making them magnets for foreign capital. Foreign buyers tend to pay above average prices and often purchase with all cash, strengthening price floors and liquidity. They are often seeking investment or vacation properties, meaning even when domestic demand slows, foreign demand can keep supporting these markets. So, your smart money insight, global capital is returning and it's flowing preferentially into sunny, high amenity or gateway states. If you invest or list a property in Florida, California, Texas, New York, or Arizona, you're not just competing with local demand, you're playing in an international marketplace. That adds a layer of liquidity, pricing power, and long term value support many US buyers don't factor in. A wealth building insight, staging your way to stronger offers. And this is all about the power and the advantages that staging a property will present to you. And again, that heading says it all, staging your way to stronger offers. So for homes that warrant good, strong staging, first impressions count. Boost curb appeal with fresh landscaping and clean entryways. I cannot tell you how many times, um, as the second point says, drive-by buyers become interested buyers. But I've had buyers in the car and we have pulled up at properties. They've taken one look at the outside and have said, no, thank you, please cancel the showing. It happens. It really does. Staging helps buyers visualize. Neutral decor lets buyers imagine themselves in the space. Rooms feel bigger, brighter, and more functional. Remember, when we come in and suggest staging and a professional stager comes in, they're there to sell your home to the next buyer. And I know it's uncomfortable and I know it can be awkward, but many of my sellers actually wish they had lived in their home the way the stagers actually stage them at the end of the day. Staging leads to faster sales. Stage homes spend less time on the market. It creates urgency with move-in ready feel. Again, where do buyers start their home shopping? Online. It's eye candy when they look at a beautifully staged home. It really helps them feel like, okay, this is worth actually calling our realtor, getting in a car, driving there, and seeing the home in person. Staging leads to higher offers. Staged properties often receive better and multiple offers. It enhances perceived value without major renovations. Emotional connection. Buyers connect emotionally to a lifestyle because stagers are experts at staging a home to highlight the highest and best use of that home, that lifestyle that families are looking for. It reduces objections and justifies the asking price. Staging is a cost effective investment. Staging typically costs less than the first price reduction. Let me say that again. Staging typically costs less than the first price reduction. Potential for 5 to 15% higher sales price versus unstaged homes. And as real estate experts, we go into enough homes to really appreciate the value of staging. Smart money insight, strategic staging is a low cost, high return tactic. Savvy sellers know it's not about decorating, it's about positioning your property as an asset worth investing in. So let's connect. If today's brief sparked questions or inspired a next step, I'd love to connect. Feel free to reach out to me, call, text. There's my email address as well. And we would love to book a confidential consultation tailored to your goals and timeline. As a real estate wealth advisor, I am focused on helping you build, protect, and transfer generational wealth through real estate. And it all begins with a real estate plan. And that's what we would just be so honored to guide you through that process because we believe that your legacy begins with a real estate plan. And just a quick reminder that the material that we provide is for general information purposes only. This is not investment, tax, or legal advice. We do obtain our information from credible sources, but it is provided without any warranty or guarantee. And you should always consult with your own legal, financial, or tax advisor and verify all information to your satisfaction prior to taking any action. And that is it for today. And I wish everyone a wonderful, happy Thanksgiving tomorrow. I hope you have the most amazing day and weekend, making memories and spending time with the people that you care about the most. See you next week.